welcome back again to this Pro Accounting Academy. In today's video, I'm going to take you through method 2 of preparing bank reconciliation. Don't forget, in the previous video, we saw how we can use method 1. And method 1, I said, we add just the cash book, then after, we prepare bank reconciliation. Now for this method 2, it is very direct. We don't need to first adjust our cash book, but rather, we just go direct and we prepare our bank reconciliation. The choice is yours, whether you use method 1, method 2, or method 3. At Pro Accounting Academy, I will bring for you all the methods. So you make a choice whether you go with 1 or method 2. If we take an example here, for method 2, don't forget, I will be connecting method 2 to method 1. Method 1, we started with adjusted closing balance of cash book. But now for this one, we are starting with closing balance of bank statement. Let's take an example here. From our previous question, we are going to use the same question so that you can draw the right picture, how it comes out. This is the closing balance. This one is our closing balance, 96,000. So we are going to start with this closing balance of bank statement. Don't forget method 1, I started with adjusted closing balance of cash book. But here I'm starting with the bank statement. And then we work towards getting this balance as per cash book. Not adjusted one. Don't mix two methods in one. Once you choose this, don't adjust the cash book. You shall work towards achieving 108. Then after picking your balance as per bank statement, we are going to add back direct debits. Why are we adding direct debits? This bank went ahead to remove money from our account in form of charges, of course, but we are not aware. We need to add back because for us, we are not aware. We need to see our closing balance as per cash book. So anything which was done by the bank when we are not aware, in form of reducing our account, we need to go back and add. That's why we are going to add our direct debit. We are going also to include or to add uncredited checks because in our cash book, they're already there, but the bank forgot or not yet credited in our account. We need to put it there. Then if there is any check, which was dishonored, it was issued to the customer, issued by by the business to the customer, then the bank dishonors, still we have to bring and we add it back. As well, we need to subtract any income which was received without our knowledge. Maybe could be interest received, could be direct deposits, could be, we come here and we subtract. If there is any unpresented check, remember for us we issued it. So if we are to balance with our cash book, we need to go back and we remove that unpresented check. As well, if there is any check which was dishonored, bank can receive a check from customer. As we take to the business, to the bank to get our money, the bank dishonors the check. Still here, we have to come and remove it so that we don't overstate our balance, which is in the back, and we don't understate as well by doing this adjustment. Hope we can take an example. The format we used for bank reconciliation and method 1 does not differ from that of method 2. The same format, but the only difference here, we go straight to preparing bank reconciliation statement. We don't need to first study just the cash book, the what. It's just direct. Let's start. We are starting with closing balance. Closing balance as per bank statement. Remember, we have two statements here. This side, let's first take them through here. They are giving you the cash book. I explained this under method 1, and they are giving you bank statement. Cash book has the debit entries, it has credit entries, as well bank statement has debit entries and credit entries. They were recorded in there. Now, here we are going to start with the closing balance of bank statement, which is 96,000. You bring it here, 96,000. Then after that, we are going to add direct debits. Add back direct debits. We are subtracting. Where will you find those direct debits? I told you from the previous video. If you find any item in the bank, of course, if it is under debit column of the bank statement, it is expected to be on credit side of our cash book. But if you find an item here and it's not there, that is a direct debit. However, before doing that, I advise you, my students, to first clear those who are existing. For example, the transactions which are existing in cash book and those existing in bank statement, first clear them so that even you don't look at them. Let's start before even we handle that. Balance brought down, it was 100. Even here, balance BD, it was 100. Clear that so that you don't look at 100 till you finish this number. Ayman is on debit side of the cash book. We expect him on the credit side of the bank statement. We shall take him there. We shall take 10,000. Well clear. The one which is matching, don't handle it. Just ignore that. We eliminate that because it's okay. It's in cash book as well. It's in bank statement. We have a D 5,000. Even here we have a D 5,000. We have Yusuf 15. Even here we have Yusuf 15,000. Then when you go on the other side, when you go on the other side of our cash book, let's also mark those entries which are appearing on the credit side there, and at the same time they are appearing under debit column of our bank statement. When we start with Isaac, Isaac is 8,000 on credit side. When you come here, Isaac 8,000. Good, just leave it there. When you go for Ampere, 12,000 on credit side, we expect him under debit column of our bank statement, which is 12. When you look here, we have Leo 15,000. Even here we have Leo 15,000. Now, when you look at Hamda, I'm not seeing Hamda here. When you look at Ismail, Ismail is not here. Ian is not here. No problem. We shall see how to handle that. But now, I'm seeing here 2,000. But I'm expecting to see that 2,000 on the credit side. This is called direct debit. It is directly put in your debit column of your bank statement, but on your credit side, it does not exist. Such a transaction or such an entry is taken as a direct debit. From our format here, we say you have to add direct debit. Which direct debit there? I'm seeing what is that? That's banker charge of how much? 2,000. Can take it even direct. 2,000. You can add, according to our formula, we add uncredited checks. Uncredited checks. I explained, I told you, uncredited checks, of course, those are deposits in transit. You issue the check. You're not issuing, you as a business, you receive the check from some maybe accounts receivables. Even you sent your check to the bank, but bank has not yet credited your account in the bank. So such checks have to be added back on here and our bank reconciliation statement. We identify such checks. Those checks will be appearing on the debit side of the cash flow, but they are not appearing under credit column. That's why they're called uncredited. They are not yet credited in our bank statement or our bank account. So how do you see that? Here we have Ahmed. But there is a note here down. You need to first read all the notes so that you don't make a mistake. They're saying a check written to Hamda and received from Ahmed were dishonored. For dishonored, first put a marker there. That is Ahmed. You put a note to show this is a dishonored check. Here, Hamda is also a dishonored check. But my interest is to look for uncredited checks. Checks presented to the bank, but not yet credited to your account. We have John 20, and he under credit column here. Under credit column, I'm not seeing the amount for John. We have Joseph, and under credit column, I'm not seeing any amount for Joseph. So you bring here, and you capture their names. You have John, which is 20,000. You can take a direct, no problem. Or you can first add from here and then you take the other side, no problem. Then you can put for Joseph, how much? 4,000. We are adding back that amount. Yes, they have not yet credited that account, but they will credit it as time goes on. But here, for the reconciliation purpose, we have to first add back that amount. When you look at our format here, I told you start with direct debits, you add uncredited checks, then the dishonored check must also be brought back there. Any check issued to the customer, but it was dishonored by the bank. When the bank dishonors the check, of course, means money has not been removed from your account. You come here and you put what you call dishonored check. Now, which check was dishonored? This one, the one which is issued by the business. The one which is issued by the business appears on credit side of the cash book. The one which is received by the business, I'm talking about the check, appears on debit side. So which one is appearing on credit side? That is Hamda. We gave Hamda this check and bank refused to pay this check. So we bring it back. So we shall add here 2,000. Finished. Then you go ahead, subtract. What are you going to subtract? I told you any direct credit which was made on your bank statement, go and remove it so that you don't overstate your cash flow. So we shall go and remove the direct credits. Direct credit. The moment you see credit memo, it is document given to you by the bank showing you, alerting you, your account has been credited, and for you are not aware it was done directly to your account. You pick that for Samsung, this Samsung, yes, and you put 3,000. Then you bring unpresented checks. You issue the check to the suppliers, to employees, whoever. But this person has not yet presented this check. Please, you go and you subtract this. So we shall list as well unpresented checks. And unpresented checks, look here. When you issue a check, of course, in your cash book, you record on credit side. But in the bank, it will appear on debit side. But now when you look at these checks, we have Ismail 6,000, but it's not appearing anywhere under debit column of our bank statement. The same applies to Ian, but it's not appearing anywhere. For Hamda, they have already given us a note that that was a dishonored check. And these ones, they are not dishonored, but rather not yet presented to the bank. You bring and you subtract from here. Dishonored check, we have Ismail, how much? 6,000. Then we have Ian. Ian, which is 90,000. Ian, which is 90,000. Yes, you can see now how we are moving. You bring the closing balance as per bank statement. You pick it there the way it is. You add any direct debit made by the bank. You bring uncredited check. Joseph, you have John, and this one are the check. Then you subtract direct credit. Direct credit, I have already explained that. You subtract unpresented check as we have seen there. Then even you go ahead to subtract this honored check. And this honored check here, yes, here we have this honored check under subtracting. Even if we have this honored check, I think you can see this. Now this honored check, excuse me, I'm saying 2,000. That was a mistake. It is 6,000, which was check which was given to Ahmed. This honored check, it was 6,000, not 2,000. It was 6,000. Up, you add it back. As well, we are going to subtract the check we had given to Hamda, but it was dishonored. That was 2,000. You bring it here. You subtract. Don't forget, the purpose of our method 2 is to get closing balance as per what? Cash book. So we expect when we add this, then you subtract bracket. Of course, I told you last time we are subtracting. Subtract this, you get your closing balance here as a cash book, which is 108,000. Now, This method 2 is very direct. What you need to master here is we start with the closing balance. Which balance? For bank statement. Then we start working towards achieving the closing balance of our cash flow. So you can either decide to use method 1, where we start by adjusting. For students outside there, sometimes the lecturer may decide to ask part A, prepare adjusted cash flow. Then part B, bank reconciliation. For such a case, you don't have any choice. You have to go for method 1. But where the question is open, you are required to prepare bank reconciliation, you can go direct for this. Instead of starting with adjusting the cash flow, you can leave that. You come for method 2, you just adjust your closing balance for bank statement, then you work towards achieving the closing balance as per bank cash flow. With that, takes us to the end of method 2. When there is a need, I will come back for method 3 and even other methods. But please, you practice. 3, make sure you know why we are recording, where you are putting that item. Don't just add and subtract. No, you should know why we are adding. You should know what, first of all, what brings bank statement to be different from cash book in terms of their balances. The moment you master the reasons, then you can start looking for those reasons like direct credit, direct debits, unpresented checks, uncredited checks, among others. Then it will help you to know why they are not balancing, and you work towards achieving the balance for those two statements. Hope you can see that preparing the bank reconciliation becomes very simple if you master the concept, if you understand why we are doing bank reconciliation. Choose any method, practice. If they have any questions still in regard to bank reconciliation, don't forget to go to comment section, let us know, then we can come immediately and we'll help you. Thank you very much. Don't forget to subscribe. Don't forget to share and comment. Like, thank you very much. Meet you again in another video.